So here we go, everybody. So today we're going to go over the US 30, the Dow Jones. We're going to go over the history of it. We're going to go over stuff about trading with it. We're going to go over what it actually is. You know, my name, once again, is the Beast Trader. I live a freedom lifestyle. That's, first of all, the most important freedom part is spiritual freedom. You know, I serve God and I do everything that I can for the Lord. When I'm helping out people or doing things for other people, or even when I'm teaching you guys, I'm trying to teach as hard as I can. I'm trying to help people as much as I can because I know I'm actually doing it, you know, with God's abilities that he gave me, enthusiasm. That means God in you. And so I'm doing it with enthusiasm. I'm doing it, you know, so I could help people in their life. And then number two is financial freedom. Everybody wants to be financially free to where they don't have to worry about money. Well, that's a good feeling in your life when you don't have to worry about money and you're not worried about your bills or your payments or what kind of car you have. It's like you're a little bit above worrying about those kind of things in your life. I know me and my brother, we used to say, you know, back in our 20s, people would say, well, what is kind of like financial freedom to you? It's like financial freedom starts out, the littlest step of it. We used to tell people is like having your bills paid for 3 months up front, having everything on auto pay, and you not having to worry about the next 3 months. Everything that you get, your food, your fun, you know, your house, your car, everything is paid up like 3 months in advance, or you could take it out for 3 months and you don't have to worry. So that's the beginning of financial freedom in America to me. But the real financial freedom is to have enough to be able to go out and help other people, do the things that the Lord really wants you to do with your life, instead of, you know, just making enough to support your family. Now you have enough to help out the family of God, right? And then number three is time freedom. A lot of people that are financially free, like some doctors are, some business owners are, but guess what? They don't have any time freedom because they're working all the time. So they have the money, but they're always working. They can't go on vacation. They can't stop their business because they don't have somebody else to come in there and kind of run it. Everything will crumble. It's that kind of mentality that makes you so you don't have time freedom. So some people that are time free, like my homeless ministry, I mean, there's people that are out on the street sometimes that have unlimited time and they're not worried about anything concerning with time, right? But they don't have any money. So that's the American nightmare, to have unlimited time and no money. The other American nightmare is they have a whole lot of money, but no time. So there's two sides of the boat, depending on where you're at, or if you're in the middle somewhere. We're going to help you get to this financial freedom. US 30, and it's also called the Dow Jones. So what you're going to learn today is just the basics. This is to get you involved. I did big time research for this. I've been working on this for weeks. But the Dow Jones inception, we're going to talk about what is Dow Jones and when did it start, right? Then the next thing we'll talk about is the major Dow Jones events, the top highs, top low, the biggest downtime, and the greatest uptime, right? Then we're going to go over the US 30 meaning. What does the US 30 even stand for? And then what is involved with the US 30? What makes up the US 30? Like, how do they come up with that? And then we're going to go over the US 30 calculation. How does a company get added or taken out of the US 30? And then we're going to go what is most beneficial to us is how to trade the US 30. What is a basic strategy to understand and trade the US 30? Now, we trade with the bounce strategy, but there's also just the overall average person that trades US 30. It does a certain thing. So I want you guys to know what it usually does so you guys could effectively trade it. So number one, the history of the Dow Jones US 30. Introduction. The Dow Jones Industrial Average, also known as the Dow 30, is a stock market index that tracks 30 large publicly owned blue chip companies trading on the New York Stock Exchange and NASDAQ. The Dow Jones is named after Charles Dow, who created the index in 1896, along with his business partner, Edward Jones. And you guys probably heard of Edward Jones and Charles Dow. You know, there's banks named after him still. These people kind of changed the game way back, you know, over 200 years ago, 1896. This is what the Dow Jones looks like. If you go to the inception of the Dow Jones all the way up till now, this is what kind of volume is in the Dow Jones. You know, it started out at like 1,000, went all the way down under 1,000 at a time. And, you know, we'll go over that time. What happened right there when, you know, what happened when it collapsed right here? Like, boom, for years. This is years of collapsing. And then it started rising back up. And now we're all the way here. And you guys see that it just started collapsing again pretty fast, right? The best year in the history of the index was in 1915, when the index value increased by 81.66% to close at 99.15 points. So it went up 81% in 1915. Well, what happened in 1915? I believe we were in World War I at the time. And this is right before we got in World War I. And our economy was booming and everybody else around the world was kind of going down because we didn't get in yet. So we had some inventions that was used in World War I, like machine guns, gas masks, you know, the gas that people were using. Guess who they bought that from? They bought that from America. And so these blue chip companies, what we call them, were the biggest companies in the world, were the ones that were what? Supplying weapons in World War I. That's why it went up so high. So we're talking about big companies. Let's go to the next part. So the Great Depression, right? The longest and deepest downturn in the history of the United States in the modern industrial economy lasted more than a decade. For 10 years, this thing lasted, actually more, beginning in 1929 and ending during World War II in 1941. And some people say right now we're heading into a depression. The only reason why the news doesn't say we're in a depression is because if they said that, then everybody will pull their money out the bank. And that's what happened. Everybody pulled all their money out the bank and everything crashed. People were waiting in soup lines that were doctors and lawyers because they couldn't even buy food. That's how bad it got. People, you know, kids were picketing that their dad needs a job. You know, African Americans couldn't even get a job at all. Really bad economy. This is a soup line right here. These are people, you see them wearing suits and real nice clothes, but guess what? They're waiting for what? They're waiting to get food. You know, there's other lines like this that the people were waiting and take their money out the bank. Can you understand if there was a line like this outside of the bank and what the people inside the bank are thinking? Pretty soon they're going to run out of money. I remember I think it was 2007, I was in Atlanta and a bank ran out of money. And it's out of business. It was something to do with Sun Trust or something like that. But that bank ended up going out of money. And those people on the news waiting to get their money. And they were saying, well, you can get $50,000 that's insured by our government. But this one guy was like, man, I had $1 million in there. He had his whole life savings in. And they were talking about only giving him $50,000 back. But a bank bought them out and then he did get his money back. So the best day. So the best day in the history of the index was October 6, 1931, when the index value increased by almost 15%. Although it should be noted that this occurred one day after the Dow Jones experienced its fourth worst day of all time, dropping over 10%. So the one that we went over before, it was the biggest year. This is the biggest one day. It went up 15%. But a couple of days before, it went down 10%. So we all know, since we're trading, that what happens is sometimes it goes down so low, everybody starts buying back. And that's what happened right here. It went down so low and everybody started buying it and it pushed it up really fast. And 1931, this is when, you know, we were basically being taken off of the gold standard. So our money started not being backed by gold. Around this time, in about 2 years later, in 1933, is when the gold standard stopped being relevant. So, you know, United States started making money out of thin air after this time. The worst day in history. Look at this, you guys. The worst day in history is around our time. Everybody was here. On September 29, 2008, after Congress failed to pass a $700 billion bank bailout plan, the Dow Jones Industrial Average falls 777 points in one day. You know how much money you could have made if you just went for it to go down? Oh my goodness. It would have been crazy. So the people that were rich, they were trading it to go down. And then a lot of people got poor because they had their money in what? These companies. These top companies are the most safest companies. So a lot of people put all their money in these companies in the stock market, and it went down so fast that a lot of people lost money. So it's the largest single day point loss in its history. One thing that you guys can look at, because I know I'm not into politics, but I know a lot of people were mad at Obama. They said the government kind of, the money went down at this time. So this is before Obama was elected. It's at the year before Obama got elected. Obama got elected right, like probably like 4 or 5 months after this. And so this happened right before he got handed the keys to, the worst in modern history, the worst basically economy in the United States in the modern day history. And they had to do a lot of bailouts and a lot of things. And I know Trump did too. Trump, when he came in, he did a lot of bailouts because of COVID and different things like that the country needed. So, but just remember that the worst day in history was during Junior Bush's term at the end of his 8 years. And people said they were taking all the money out these big corporations. Okay, so Dow Jones started out being what? Called the US12. So the Dow Industrial Average was originally formed in 1896 with just 12 stocks. All right, then it increased to 20 stocks in 1916. And then now we're at 30 stocks. And so in 1928 was again increased to 30 stocks, which is the number of the stocks used today. So what does it mean by the stocks and everything like that? Do we understand what that means? Well, this is what it means. What is the US 30? The US Wall Street 30 tracks the performance of the 30 largest publicly owned companies in the United States. Unlike market capitalization, this is a weighted index such as the DE30 or the UK 100. The US Wall Street 30 is a price weighted index. So it's price weighted. So, there's companies that are super rich. And so if they go down, this whole US 30 will go down faster, depending on which place these 30 companies are. So what are the 30? Well, the 30 in alphabetical order and numerical order is M3, American Express. These are all things that you guys have heard of or have seen logos. Amgen, Apple, Boeing, Caterpillar, Chevron, Cisco Systems, Coca-Cola, Disney, Dow, Goldman Sachs, Home Depot, Honeywell, IBM, Intel, Johnson & Johnson, JP Morgan Chase, McDonald's, Merck, Microsoft, Nike, Procter & Gamble, Salesforce, Travelers, United Health, Visa, Walgreens, and Walmart. These are the 30 that make up the US 30. These are big companies. Everybody knows about them. They're always advertised. They're either big time banks or, processing companies for money, or the biggest, restaurants in America, are the number one, like Merck, the number one people that make medicines and things like that, are Travelers, the number one insurance companies. So these are the big guys, are the big Apple, right? The number one in electronics, Boeing, the number one in flights. So whatever is on here, these are number one companies. Home Depot, the number one at, selling stuff to make houses, and Disney, another number one. So these are the ones. The one thing that I was thinking, like, why is Google not on here? But then it started making sense when I found out, like, how can you get on this list? Even though Google is super, super rich, they divide their money between their different companies. Now they got like something called ABC that controls it all, right? What is the US 30? Continue. The index often faces criticism because it is price weighted average, which means a higher price stock will have a greater influence over the index than those with a lower price, and thus does not take into account percentage change. Additionally, many feel its inclusion of merely 30 stocks is not an accurate representation of the overall U.S. market performance. So people look at this to see what the overall U.S. market performance is, but we're only looking at 3 companies that are doing really good. So is that an accurate, prediction of the whole economy? No, because we're talking about the 30 best companies, and they're ran by the best people. They have the most money. So is that a good indicator? No, right? But it kind of is, because when these companies start going down, it's telling you more of like, are we going in a recession or depression? Are we in a good time? Because these companies are always making money, but like right now in recessions, these companies aren't doing as good as they were before. When investors want to know how the stock market is doing, they turn to stock indexes like the Dow Jones Industrial Average, commonly known as the Dow. It is a collection of the 30 blue chip American companies that, when taken together, provide a snapshot of the overall stock market. When the Dow ends a trading day higher, investors take that to mean the overall market is up. When the Dow ends the day lower, the market is down. And it's funny how one thing, and you could look and see how America is doing. People love to do that. They love this is like looking in the microwave, right? Pop out and see, instead of having to do the research on a lot of different stocks, it's like, man, let me look at these 30 and I'm gone. Pick up the paper real quick and see what we're doing. So what makes a company a US 30? Well, there's really kind of no definite definition, but there is like a board that picks these. So one of the things is a component of the Dow may be dropped when a company becomes less relevant to current trends of the economy, to be replaced by a new name that better reflects the shift. So when a company stops doing as good as they were, then that's a way to get taken off the list. So there's more ways to get taken off the list than to basically recommend somebody to become on the list, which was kind of strange to me. I thought there would be like a mathematical calculation, but if you look at the different stocks, there's way different values on them. The divisor. So the divisor is pretty cool if you really understand this. So the divisor is a predetermined constant that is used to determine the effect of a 1-point move in any other approximately 30 stocks that comprise the Dow Jones. So they use something called a divisor. I went into it. I didn't want to really explain it too much in this presentation because it got into a lot of math and stuff like that, which I don't think we really wanted to talk about. So there are no rules for Dow inclusion. There is only a broad guide that requires large, respected, and substantial firms with high stock prices in general. These firms represent a large portion of the economy activity in the United States. So there isn't like something that determines you could be it, but it's more of like, are you respected? Are you super big? And would you get kicked out? Like some companies go up and down. So those companies, they really wouldn't be a top 30. Most of the top 30 companies are companies been around for, 30, 40, 50 years. Amazon's not on here. You see that. That's kind of weird, right? That's one of the biggest. Google's not on here. Maybe because they're new, or maybe because they go up and down so much. The guy from Amazon is, over $100 billion one day, and then Amazon goes down, and then he loses like 20 billion in a day. Maybe they're saying it's too volatile to put on here, and it's too new, like that and Google. Those are the two that I would really want to know why are not on here, Amazon and Google. Calculation, let's go over it a little bit, right? The calculation, the points on the Dow 30 index is calculated by dividing the total of all share prices on the index divided by the Dow divisor. The Dow divisor is updated when the company on the index completes a stock split, as it can impact the share price of that company. So when stocks split, a lot of people, buy into stocks that are splitting and things like that. They usually come out and make a lot of money when it splits. That's what usually happens, because now people could buy, an individual stock for half of what it was before, even though they're still getting the same equity in the company. Some reason people feel like they're getting more when it splits. Weighted. The Dow is a price weighted index, which means that each component company is weighted according to its share price. So everything is on there. Impact. Higher price companies have a larger weight than lower price companies, and so their movement has a bigger impact on the index overall value. So right now, I know that one of the number one companies on that 30 is, let's say, Apple, right? Let's say Apple does really bad in a month. This US 30 can go down 1,000, 2,000 points just because of Apple, just because one of them did really bad, right? Because Apple is so much bigger in price value than these other companies, or most of them. And then like a Visa, can you imagine Visa? Like if Visa lost a lot of money one month. Well, Visa, we all know they're the processing company. Every time we use our ATM card or debit card or credit card is usually a Visa. So, you know, it's probably not going to go down that fast. But if it did, then you would imagine like the US 30 like really getting hit hard, maybe going down 3,000 points or 4,000 points in a month. So what causes the US 30 to move? So how does it move up and down? I kind of explained that a little bit, but let's go into further detail. So some of the biggest factors which influence sentiment are rapidly changing energy prices, war or terrorism, and political unrest or gridlock. That means when gridlock is when the governments are, you know, 50-50 on something and there's no way to get, you know, a bailout or no way to get this money to the people that need it and things like that. Uncertainty tends to have a major impact on investor sentiment and their willingness to invest in the equities that make up the Dow Jones. So remember, what's going on right now? Let's see. Should the US 30 be moving really fast one way or the other? Okay. Well, rapidly changing energy prices. Number one, everybody knows that. Look at your gas, right? Number two, war and terrorism. Is war? Yes, war. Russia's in war right now, Ukraine, right? We're sending weapons to Ukraine. So we're a part of the war. We might not be in the war, but we're part of it. And political unrest or gridlock. Is there political unrest in the United States? Yes. You know, the 50% of the people do not like Biden, and 20% of the people that used to like Biden are mad at Biden because gases are so high and the food got so high. So is that political unrest? Yes. Is there gridlock? Is there some decisions that the government's not making right now because everybody can't get along? Yes. They're extending stuff that happened because of COVID. You know, they're even saying like maybe COVID can come back. So they're trying to do mass date, federal mass date. I mean, we're going through all these political energy, war, all this stuff is happening right now in our economy. That's why this US 30 is going to be moving really fast up and really fast down. Okay, the Dow is influenced by major economic data, such as the rate of unemployment or inflation, right? Those are things that we predict, are things that come out with numbers a month after they're out. Geopolitical events and decisions on the Federal Open Market Committee, that's the FOMC that I always show you guys, more commonly referred to as the Fed. Since the United States is the largest global economy and the US is the reserve currency of the world. Remember, the USD is the reserve currency of the world. More deals are made in the world with the US, either digital money, USD, or the $100 bills. The $100 bill is the most widely used bill around the whole world. A lot of people don't know that. The decisions of the Fed to alter their monetary policy wields a tremendous influence on the markets in general, but tends to have a more pronounced impact on the US 30. So that's what's going to make everything move, is these government things. Why would unemployment or inflation hurt the US 30? Well, we're talking about the biggest 30 companies. Mostly these biggest 30 companies have what? The most employed people, right? Think about that. Inflation, is that going to hurt? Well, yeah, these 30 companies, when inflation happens, they're going to have to charge more for their products. They're going to also have to pay more for their employees, which is going to make all this kind of shift and do different things. Okay, let's go to understanding trading the US 30. So how do you trade the US 30, Beast Trader? Thank you for telling me the information like you're a history teacher, which I used to be, right? So I did want to show you guys that history of it so you guys understand what we're really doing. But how is that going to help me become a better trader? Well, this is the part right here. You're going to understand trading the US 30. Number one is, when should you trade? As a price-weighted index, the performance of the 30 stocks on the U.S. Wall Street 30 can have an extensive impact on the entire U.S. stock market. Trading takes place between New York Stock Exchange hours of 9:30 a.m. to 4:30 p.m. weekdays Eastern time. So that's in the Eastern time zone. This is when it opens up and when it closes. Now, right now, it's closed, but people can still trade. Okay, but the time that it's going to be most volatile, like moves faster up and faster down, is between 9:30 and 4:30. The time that it moves the fastest, if we go with East Coast time, is 11 a.m. East Coast time. It's about 2 hours after the economy of the United States opens up in the East Coast. It takes about 2 hours, and then things are moving and grooving and clicking. What pair correlates with the US30? So why do we need to know what pair correlates to US30? Well, we want to be able to see what usually, what Forex market does the same thing that the US30 does. So the correlation between the USD versus the Japanese yen and the Dow Jones Industrial is one of the strongest in all financial markets. So the best thing to do that correlate together is to look at the USD versus Japan. And that usually is, happening the same thing that the US30 versus the USD is going to do. So we can look, if the USD versus Japan is going up, right? And let's say US30 is going down, most likely the US30 is going to start going up because USD versus Japan is going up. So this is the kind of thing that we can use together in our strategy to kind of weight the currency strength. This is how we get to the currency strength meter. We're going to use the USD versus Japan for our currency strength. Number 3, what time is US30 most volatile? Regular trading begins 9:30 once again. So the hour ending at 10:30 is often the best trading time of the day. Some people, they just trade that 1 hour a day, US30, that's it. It offers the biggest moves in the shortest amount of time. Many professional day traders stop trading around 11:30 because that's when volatility and volume tend to taper off. So if you trade during that time, you guys will see it goes up and down crazy fast. It wouldn't even be good to be teaching a class at that time because things will be moving way too fast. There's a lot of these are the traders that are trading, down at those, at the offices or in those markets to where they're like taking trades really quick, $1 million here, 3 million there, $1 billion there. So what we do is we do contract for difference trading, right? That's what I want you guys to always put that in your head. Contract for difference trading, right? We call it CFD. Of the various indices available around the world, the US30 is one of the best known options available to traders, offering an easy way to get exposure to 30 of the United States' largest companies. So what would you have to do before the US30 really is traded? You would have to put money into a stock. And I got friends that do that. They just trade a stock. They'll go in the, Apple computer and they'll buy up some stock. If you got big money, let's say you have $500,000, you buy Apple stock, $500,000 worth. If Apple stock goes up the next day, 3% or something, you made 3% on $500,000. That's the average person that's like trade stock. That's how they do. It works really slow. You got to have a lot of money to get in. What we do is we call CFD, and we can use leverage. We don't have to use all our actual money. We can use leverage, and that's what volume does. Volume allows us to use different leverages so we could trade more than sometimes what we even have in the account. If it goes the wrong way, your account will be wiped out really quick, right? If it goes the right way, you would make way more than if you just bought the stock. Let's say we have a $100,000 account. If we bought Apple at $100,000, and let's say at the end of the week, it went up 5%. Okay, now you made $5,000. Well, we can do a trade and make $5,000 in a minute or two. You see the difference? And that's why contract for difference really helps, the average person make a way more money on trading. And so that's what we do. And we're trying to train you guys on how to do this. If you guys just trade with us, you guys will learn, and we win a lot. We're over 80% traders, me and the doc. And so if you just trade with us, you're going to be doing really good. Now, if you trade by yourself, remember to use the same stop losses, use the same, strategies that we're teaching you, because you don't want to start trading by yourself and falling asleep or having nightmare scenarios to where you went to the bathroom and everything's wiped out. You got to make sure that you know what you're doing before you start trading. Okay. The most important things to look at while trading the US30 is index trading is a popular, easy way to invest in a group of businesses or a representation sample of a country's largest companies without being forced to invest in individual companies. In general, experts also recommend watching the 200-day moving average as a reliable indicator of whether to take a bullish or bearish view of the index. So that's what we use, and that is inside of the Bollinger Band. That's the inside line of the Bollinger Band. So we use that to determine our trend. Remember that, right? Use traditional chart patterns and technical indicators to spot short-term trading opportunities that capitalize on US 30's volatility. That's what we use. That's called the bounce strategy, technical indicators and charts. Companies with the greatest influence on this index include 3M, Boeing, Chevron, Goldman Sachs, Home Depot, Apple, and Visa. Economic events to watch out for. So if these economic events happen, you got to be very careful, right? Inflation of the US dollar, which is so high right now. It's the worst time in the last 40 years. Last month, May, was the worst time in the last 40 years of inflation. Remember that. Treasury yields, industry disruption that affects US 30 companies, right? Like COVID. When COVID happened, I pulled this off of this thing where it was talking about COVID and how, these 30 companies went really sour for a while because of COVID. Nobody was going outside. Nobody was buying, everything like that, right? Pay close attention to global economic news, especially job reports, other indicators of economic health. So we need to look at these things to make sure we know what's going on in our future so we could definitely trade this the right way. We don't want to wake up and think that we're trading this the same every time and then, a war broke out, or, inflation's super high, or the unemployment came out and is really bad. Those things would make this, things shoot down really fast. That's it, you guys. Thank you guys so much for everything. And hopefully you guys learned a lot here.